Is your money better off in small caps or in big caps? Would that be more rewarding? Well, let's bring in Eric Marshall, co-portfolio manager of the Hodges Small Cap Fund, and Michael Santatera, co-portfolio manager of the Ridgeworth Large Cap Growth Fund. Gentlemen, thank you very much for joining us today. Eric, the Russell 2000, the home of the small caps, was down by about 7.5% over the course of last year. So not the best year overall for the index, but where would you find opportunity for this year?
Well, at the Hodges funds, we really see small caps as being the best areas for individual stock selection. And one reason is that they have less exposure to geopolitical uncertainty, foreign currency, commodity prices. And it's really the area of the market where you have wide dispersions across valuations. And you can go in and pick out companies with secular growth opportunities and really focus on individual businesses that are less sensitive to the overall macro environment. We also see M&A continuing in 2016, which we think will help support the multiples of a lot of smaller companies that could be takeout candidates by larger companies.
M&A in which particular sectors of the small cap world, Eric?
Really, we think in financials. We think there's some pockets of industrials and consumer stocks that'll do well. And there's probably still some M&A in healthcare to take place.
What about you, Michael? Why would you be sticking on the larger end of the capitalization scale?
Sure. At Sylvan Capital Management, we manage both large and small cap strategies, but we like large a little bit better at the moment, primarily due to the safety and the scarcity of growth. The longer we get into this recovery that started in 2009, the more difficult it becomes to really find companies who can continue to grow predictably. And large cap companies, particularly the ones that we invest in, that have secular headwinds, that are taking some market share and having some pricing power, are doing well and continue to do well, even in last year's returns where the market was generally flat. Those stocks have outperformed. We think large can continue to do that into 2016. And
in which particular names would you be putting your money then, Michael?
Sure. Well, we like disruptors across the board. Right now, we like Vulcan Materials, Facebook, and Under Armour. They've all got different things going for them, but they all take place with a stronger consumer and definitely secular trends in the way both advertisers and consumers are spending longer term.
What about you, Eric? Which particular stocks have you got in the small cap world?
Well, one that we like is Eagle Materials. They're a significant producer of cement as well as gypsum wallboard. The cement business is doing very well because of infrastructure, highway spending, and we see a continued recovery in residential housing being a nice tailwind for the wallboard business. They do have some exposure to energy and frac sand. We think that's priced in. The stock's down about 40% from its highs. So we think it really represents a nice risk reward in here. We also like Club Corp, which is a owner-operator of 158 different country clubs and 48 business alumni clubs. And what we like about that business is there's a lot of reoccurring cash flow. It's not about the number of rounds of golf played, but memberships. And it trades about 7.5 times enterprise value to EBITDA, just under a 3% dividend yield. And we think that's one that should do very well this year. And then lastly, I'll mention Hilltop Holdings. This is one of our favorites in the financial sector. And they made a transformational acquisition last year. They're now about a little over $12 billion in assets. And we think a lot of synergies from that acquisition will transpire here in 2016, and we see a lot of upside to earnings. It trades about 1.3 times book, and we think it should trade on the upper end of its peer group, which would be closer to 1.5 to 2 times.
Okay, so some ideas there from both of you. Thank you very much to Eric Marshall of the Hodges Small Cap Fund and Michael Santatera of the Ridgeworth Large Cap Growth Fund. Melissa, over to you.
Thanks a lot, Mandy. We're coming up on 2 p.m. on Wall Street. Stocks deep in the red, but well off their session lows. Right now, the Dow is